Welcome to another edition of Let's Talk Money with Wendy Silebi. This morning we are talking credit, and I'm quite excited to introduce my guest for today, Tate Alf Matsimbi. He's an Education and Communications Officer at the NCR. Well, welcome, Tate Alf Matsimbi.
Thank you very much, Wendy.
Yeah.
Indeed, it's a pleasure to have you here at our offices.
Yeah, awesome. Yeah, no, at last I made it here, and I'm very, very excited. Maybe just to before we get into the questions of the day, who is Alf Matsimbi? Can you just give us a brief introduction of who you are?
Alf Matsimbi is an educationist, a facilitator, a God-loving person, but above all else, my deepest passion is to really see South Africans overcoming over-indebtedness and to live a very comfortable life. Because you see, the biggest challenge that we are facing as South Africans is that we are living paycheck to paycheck, and that has got a very, very negative impact on the livelihoods of people.
Yeah.
We're doing things that we cannot afford, and at the end of the day, it really affects and impact negatively on our family lifestyles.
Yeah.
So that's who Alf is.
Okay. No, thank you so much for that awesome introduction. I mean, I think you and I are in what they would call, the young people would call, the same WhatsApp group.
Oh, yeah.
Passionate about educating, passionate about empowering. And I believe that credit is one of those topics that people grapple with. And so I think we're in the right place, and I'm in the right company. Yeah, so NCR. Please tell us a little bit about the NCR and what the role of the NCR is.
Thanks, Uswendi, for the question. The NCR basically is one of the DTIC entity, Department of Trade, Industry and Competition. It was established in June 2006 in accordance with the National Credit Act number 34 of 2005. The main role of the NCR is to ensure that there is registration of industry participants. By industry participants, we're talking about alternative dispute resolution companies, payment distribution agents, credit providers, credit bureaus, debt counselors. So the NCR registered these participants, and after registering them, monitors their conduct to ensure that the rights of consumers are protected. The other important role of the NCR is to educate and to create awareness of the protection offered by the NCA. And we conduct research within the credit industry and looking at the trends, what is happening within the credit industry. Then it advises the government on policy issues and legislation. But what is of critical importance to the consumer is to know that the NCR is there to receive and to investigate complaints.
Okay.
If you feel you are unfairly treated within the credit industry, the NCR is waiting for you to lodge a complaint with our office. We'll receive that complaint and we'll investigate, so that we can ensure that your rights as a consumer are protected.
Okay.
And if you find that indeed your rights were violated, we enforce the act. How does the NCR enforce the act? It enforces the act by taking action against contravention of the National Credit Act.
Okay.
So in a nutshell, that's what the NCR does, and that's our mandate in line with the National Credit Act.
Sure, that sounds like a huge mandate. And one of the things that you spoke about is about the protection of consumer rights. And maybe I just want to know, and you spoke about complaints that you receive. So maybe let's talk a little bit about what kind of complaints would you, as the NCR, deal with. And I think what I loved the most is that you don't recommend, you enforce whatever decisions that you come to. So if you can just go back to that question.
Yeah. Remember, the National Credit Act specifies that consumers have rights. But I must also indicate that the rights are forever paired with responsibilities. So the consumer has a right to apply for credit free from discrimination.
Okay.
So you as a consumer, if the minute you feel like you are unfairly treated and you are discriminated, you must take the action to ensure that discrimination does not apply within the credit industry. The other important thing is that when you apply for credit, the credit agreement has to be written in a language that you understand. When you apply for credit, the credit provider has an obligation to give you a pre-agreement statement and a quotation,
Okay.
so that you can make an informed decision. So consumers have to be charged according to regulated charges. So these are some of the things that you can see that rights of consumers can be violated. For example, the National Credit Act specified that charges have to be regulated. So in other words, there is a ceiling. You are not supposed to be charged beyond a certain limit. Let me give you a good example. Here is a mashonisa. You apply for credit and they just charge you an abnormal charge. Look, according to the regulations, when you apply for a short-term loan, you have to be charged 5% and not more than 5% for interest.
5%.
5% for interest rates.
Okay. And then what is a short-term loan? Could Harry describe what kind of amounts?
A short-term loan is any amount that does not exceed 8,000 rand.
Okay.
And also, you as a consumer, it only becomes a short-term if you are willing to repay within 6 months.
Okay.
Then it's a short-term loan.
So 5%.
5%.
Okay.
And if you have to come again within that period, the 12 months, that you are applying again, then the credit provider must charge you not more than 3%. The first, it's 5%.
Yeah.
Then if a consumer returns, then the consumer must be charged 3%.
Okay.
So that's a short-term loan. Now, violation happens in a sense that credit providers may not tell you, unscrupulous credit providers, not all, unscrupulous credit providers will take advantage of you. Instead of charging you 5%, some of the credit providers can even charge you what we call an upfront fee, which is prohibited.
Okay.
So that's a violation of your rights as a consumer. So out there are complaints from consumers to say, but wait a minute, I'm charged abnormal fees. I've been paying for this loan forever. I'm not finishing. Why is it like that? So then a consumer, if he feels like the credit provider has not treated him or her well, you lodge a complaint.
Yeah.
We've got a team of investigators who will look at your problem and then check as to whether there's deviation from what the National Credit Act says. Okay. So other complaints that we are forever receiving, it's from consumers who are placed under debt review without their consent.
Okay.
You receive a phone call.
We'll get to it, but I'd like to do a follow-up on the short-term loans, which are 5%.
Yes.
Other loans, are there a ceiling that are placed for if I apply maybe for a personal loan, I mustn't be charged more than that, or if it's a medium-term loan, or does this 5% only apply to short-term loans?
Or only for short-term loans.
Okay.
Only for short-term loans. Remember, we've got mortgage bonds. We've got developmental credit. Maybe let me just quickly explain what a developmental credit is. Developmental credit is that type of credit where you take money from the credit provider to start a small to medium-sized business. That's for developmental purposes. And also, when you have a low-cost house that you want to improve, that's developmental credit. And last but not least, developmental credit is when you take money for study purposes.
Okay.
That's developmental credit. And basically, this is a very, very important type of credit because it's for your own development.
Yeah.
Unlike opening up a clothing account or a credit card to take your loved ones for a holiday or for a spin. And you see, developmental credit is the most important credit. But the other important credit is mortgage bond.
Yeah.
Where you put a roof.
Now, a developmental credit, does it have maximums that can be charged, or the financial institutions can decide how much to charge?
All types of credit are regulated in terms of charges. Developmental credit, with the increase of the recent increase of repo rate, developmental credit is now just under 34%.
Okay.
Yeah.
34%. Okay, so I can be charged right up to 34% depending on my risk profile.
Yes.
Okay.
Remember, talking about risk, it's a very brilliant point that you are making. The credit providers, before they grant you credit, they have to check that you are credit worthy. You've got good credit scores. At a credit bureau, you are not adversely listed. And people get adversely listed because they are not repaying or servicing their debts accordingly.
Yeah.
So, yes, credit providers have a right to look at your affordability before they charge you.
Okay.
So, in most cases, people who do not have good credit scores will then be charged maximum charges.
Okay. Not exceeding 34%
for developmental.
For developmental.
Yes.
Okay.
But when we go back to mortgage bond,
okay,
the ceiling will be around 19%. But then they will look at how you have conducted yourself within the credit industry. If you have been servicing your debts reliably so, religiously so, they will charge you less. You can end up getting prime plus or prime minus. It depends.
Okay. Wow. That's very informative. I must be honest, I've just learned one or two new things that I didn't know, especially around developmental credit and short-term loans. So I'm hoping that the people that are watching, our viewers, are also picking up quite some interesting facts. Now, what are the disadvantages of taking out a loan with an unregistered service provider, giving them your ID, as you know, some would do, where they demand for you see your ID or your card for that matter, and then you'll come and collect it at a later stage?
Thanks for the question, Oswendi. Let me just point out clearly that unregistered credit providers have no space within the credit industry of South Africa.
Okay.
Unregistered credit providers, number one, they charge exorbitant charges. Exorbitant charges because they are unregistered and then they are merciless. Let me give a good example. Unregistered credit providers, when it comes to interest, for example, there are those who will charge up to 50-60% for a short-term loan.
50-60 versus 5%.
Yes.
Yeah.
So they charge exorbitant charges. Unfortunately, a large percentage of people who get scammed are scammed by people who are unregistered because they know they can just easily change the name and hide away from you. So some of the unregistered service providers are scammers. Often unregistered service providers charge upfront fees, which is prohibited, as I said.
Yeah.
It's prohibited. Look, the National Credit Act specifies the charges that the consumer can pay.
Yeah.
When you apply for credit and your application for credit is approved,
Uh-huh.
the credit provider has a right to charge you an initiation fee, which is a once-off charge. Then they can charge you interest rates.
Uh-huh.
They can then charge you a monthly service fee.
Uh-huh.
They can charge you credit life insurance.
Uh-huh.
If they have to enforce, they can then charge you collection fees. But unfortunately, with unregistered credit providers, there and there, when they say your application is approved, they hit you with an upfront fee, which is prohibited.
Yeah.
And after you have paid that upfront fee, there is no guarantee that the money the loan that you expect from them will be advanced to you. Many of them disappear in thin air.
After you've paid.
After you have paid an upfront fee,
Yeah.
they are nowhere to be found.
Yo.
So that is why we are saying it is dangerous for you as a consumer to take credit agreements with unregistered credit providers. Not only unregistered credit providers, even unregistered service providers.
Yeah.
Because remember, the National Credit Regulator, it regulates credit.
Yeah.
But there are other regulators out there who will regulate the services that you may be applying for.
Yeah.
Yes.
But someone can come and say, but it's so much easier to get a loan from a loan shark or a mashonisa than it is to get it from the bank. And all they say, I must just give them my card and my ID. What would your response be to that?
Yes, you may be right. But the after effects may be worse than the processes of following what the law says. Remember, when the National Credit Act got crafted, it had the consumer's rights at heart.
Okay.
It had the consumer's rights at heart. So it's easy to get somebody out there who can just say, I will give you credit. No hassle. But the truth is, you may be compromising yourself. You may be putting yourself in danger. Because you will never know that whether you are with a scammer, a fraudster, or not.
Okay.
Because many of these unregistered people scam consumers. And many of them, you find that you're only looking for maybe, let's say you want to renovate your house.
Yeah.
You're just in need of 200,000 rand. And somebody says, congratulations, your application is successful. We are about to advance some money to you, but all that we want is for you to give us an upfront fee of 20,000 rand. And you're looking for 200,000. You're desperate for 200,000. It is tempting to say 20,000, I can just quickly get it from when the 200,000 rand is in my pocket, I will be able to pay. And once you have paid that upfront fee, that person is nowhere to be found. So there is a high loss that you are at risk of losing far more than the protection that you have when you use registered providers.
Okay. And the other thing, I mean, when you give an unregistered service provider your ID, they can actually go out there and get into credit agreements in your name fraudulently. And then on top of that, ubafa your PIN, your card and your PIN. I understand, I'm made to understand or these unregistered credit providers when they have people's cards and PINs at midnight when they know. I can even tell them when you are getting paid. So midnight, by ATMing, they've got a stack of cards they are putting in there and they're putting in your PIN. So if they take more than what they were supposed to take, you have no recourse, right?
You have no recourse at all. And you see, you touch the subject of PIN. PIN stands for personal identification number. So something which is personal is not for the public. So if you dig into your pocket, give somebody your bank card, your credit card, your ID, you are violating yourself even before you are violated by the very same person.
Oh my goodness.
So what you are doing is you are basically undressing yourself in front of this person.
Yeah.
Because tomorrow there will be more credit agreements that were signed using your ID number without your knowledge.
Yeah.
And you will never come to this person and say, it's you. Because you will say, but I have withdrawn what I have withdrawn and I return everything back to you.
To you, yeah.
Where will you go
Yeah.
to complain? Because it's you. This person did not put a gun on your head. You reached out, you gave it to this person.
Yeah.
Yes, it is a prohibited act to call for credit provider to take your ID, to take your bank card, and even do as they wish. It is prohibited. It's unacceptable.
Yeah, there it is. Your PIN, PIN stands for personal information. Identification. Ne? So we are not to give those out, because if you do so, you're already opening yourself up to these unscrupulous lenders, and you have no recourse. So you can't come back to the NCR and say, saying, when you actually handed over your personal information to them. Now, when people apply for credit, because Maslow's hierarchy of needs, when you look at it, the second need is that we all need a roof over our head. It's very important. After we've received the basic things like water, electricity, we then want to be secured, and we want a roof over our heads, and we apply. We see this beautiful home that we really love. We apply for it.
Beautiful car.
Oh, beautiful. Even like home. Yeah. So the home.
Yes.
Then you apply for it. Then when you apply, probably you've done upfront calculations. Then as you complete your application, you add salt and pepper. The numbers, you inflate the numbers.
Yeah.
What are some of the dangers of doing that when you are applying? Why should we be honest when we complete those forms?
It's very, very important for consumers to give correct information to the credit providers. Because if you decide to falsify your information, you add an extra 1 rand on your salary or 5 rand on your salary. That will definitely affect affordability assessment. Your affordability assessment can be compromised by that. Why I'm saying this is because the credit provider can easily arrive at the wrong conclusion about your affordability. I'm earning 1,500, but when I come to the credit provider, I say I'm earning 15,000 rand. I add an extra 0. So you are portraying yourself as if you are a big earner when you are not. So it's very important for consumers never to falsify or even spice, as you put it, spice the information they share with the credit provider. Because you will appear like you have more disposable income when you actually don't. And you have really even deprived yourself from the protection that you have because you are falsifying the information. But on the same breath, credit providers are not supposed to rely heavily on the consumer. We have credit bureaus. Credit bureaus have better information or almost accurate information about us. So before the credit provider grants credit, they have to conduct that affordability assessment. And how do they conduct affordability assessment? Number one, you as a consumer must submit an authentic bank statement. A 3 months bank statement must be submitted to a credit provider. Your bank statement will clearly show some of your expenses and debit orders that you have. Okay? Then the credit provider must also check the information that the credit bureau has about you. Remember, every time you transact within the credit industry or even services, that information is collected by the credit bureau and it's stored for future decision making. So yes, a consumer can come to the credit provider and say, I'm earning so much when the truth is the opposite. The credit provider must check with the credit bureau and authenticate, verify that indeed this person, when he says he's working for the NCR, indeed he or she is the employee of the NCR. They must just check that information.
Yeah.
Because failure will result in what we can call a reckless credit granting, which is also prohibited.
Yeah. Reckless credit granting. Let's say I have been offered a loan, it has been approved, and then later on, I mean, Wabona, in these days, the interest rates, every time the MPC sits, the interest rates are going up. The Reserve Bank governor comes up and he says the interest rate has gone up by 50 basis points, 2.5, and the way things are looking right now, interest rates might still be going up.
Yes.
And then somebody comes and says, yeah, I applied for a loan, a bond, and then they gave it to me. I think this is reckless lending. What should that person do?
Okay, let's expatiate and clarify what is reckless lending.
Yeah.
Reckless lending is when a credit provider grants credit without conducting affordability assessment. And as I said, when you apply, you must submit your bank statement, your salary advice or wages that you proof of that, and then you must submit to the credit provider. Then the credit provider has an obligation to check how committed are you financially.
Sure.
What kind of debts do you already have? But unfortunately, there is that temptation from credit providers, some unscrupulous credit providers who will just say they just grant credit without conducting affordability assessment. And then it puts a consumer in a bad spot because this consumer is already over indebted. So this consumer is overcommitted. And yet you are putting another burden on top of this person. So it's very important for people to understand that credit providers are reckless when they grant you credit without conducting affordability assessment. So they must ask for your salary advice, they must check your bank statement, they must also check what does the credit bureau say about you.
Yeah. Okay, so let's say they advanced me, they didn't do the credit checks, and then later on, I can't even breathe, you know, and then I come to the NCR, I lodge a complaint. What would the NCR do?
The NCR will receive your complaint. It will investigate. If you say you were granted credit recklessly, then they will contact the credit provider and check if the credit provider indeed did cut corners. They did not conduct affordability. If they found that the credit provider did cut corners and they did not stick to what the processes are supposed to be, then that credit provider is in for a hijack. The matter will be referred to the National Consumer Tribunal Court to adjudicate. Because remember, the NCR will receive and investigate. If they find that there is violation of the National Credit Act, they don't take decision about the penalty that you should suffer. It is the National Consumer Tribunal Court that must decide. It will depend on whether it was a gross violation. So then the credit provider will have to face the might of the law.
Okay. So if the tribunal, the credit tribunal court then says, yes, Mr. Credit Provider, you were not supposed to have issued this, and here is our sanction, then that sanction is enforceable.
Yes.
Okay.
Absolutely.
Yeah.
Remember, the National Consumer Tribunal, it's a court.
Hey.
So once the court says you are guilty, you are guilty. Unless you take action.
Okay.
Maybe you challenge the verdict.
Yeah. No, thank you so much for what we've just spoken about in terms of consumers, the NCA, the responsibilities that consumers have, and the responsibilities that credit providers have regards to issuing credit. And I just want to say to those that are watching, when you are applying, be as honest as possible. If you don't afford the asset that you're trying to purchase, rather get one that is at a lower price so that you can be comfortable. If you look at what's happening in our economy right now, interest rates are going up, and what people bought homes a year ago, what they were paying a year ago and what they're paying today are two different amounts. So avoid that. And I hope that you've learned quite a few things from our chat, that the Alf Matsimbi. But now we get into the hot potato.
What is the hot potato?
The hot potato is debt review.
Oh, okay.
What is debt review?
That's a good question, Oswald. Among rights that the consumers have, consumers have a right to assistance when they are over indebted. Let's start there. What is to be over indebted? You are over indebted if the money you have in your pocket, in your bank account, is no longer sufficient for you to continue living a comfortable life. In other words, you have paid all your accounts and you can still buy your family groceries and so on and so forth. Then you are over indebted. And over indebtedness means you are not gonna service your debts. There are those that you'll pay and there are those that you won't pay. Then you are over indebted. And when you are over indebted, the credit provider has a right to issue out Section 129 notice, which means update your account or else will repossess. Now, the National Credit Act says consumers have a right to assistance when they are over indebted, and that's what debt counseling is. Debt counseling or debt review is basically a process that is intended to help restructure debt obligations of consumers who cannot pay their debts. It is a process whereby you as a consumer, you involve a debt counselor who will assist in reviewing your credit obligations. And after reviewing, after assessing, and then they must come to a conclusion that indeed, after the assessment, after reviewing, I am convinced that you are over indebted. So then he reschedule the payments. Let's make this good example. You are paying 10,000 rand for your bond. And because of the interest rates that went up, you are no longer coping. 3-4 years ago, you were only paying 10,000 rand. Now you must pay 18,000 rand for the bond. So you're no longer coping, because if you pay your account, then there will be no grocery at home. So you are over indebted. Your money is no longer sufficient. So a consumer will have to involve a debt counselor who must prove to you as a consumer that he is registered with the NCR.
Sure.
So this debt counselor will then negotiate the restructuring of the consumer's debts, and he negotiate with your credit providers. He will go to your bank, the bank that you bought your house from. He will say, listen, Wendy can no longer afford to pay 10,000 rand for this house. But looking at what Wendy can afford, she can only afford 8,000 rand. To go to the vehicle finance, say you were paying 6,000 rand for your car. After assessments done by the debt counselor is convinced that you can only afford to pay 4,000 rand instead of 6,000 rand. The debt counselor will negotiate even with a vehicle financier that you pay 4,000 rand only. So you pay what you can afford to pay. As long as you are still earning an income, you pay what you can afford to pay until you are done. When you have finished paying all those debts, a debt counselor must then issue out a clearance certificate. So obviously, the biggest challenge is that you're going to have a prolonged repayment.
Yeah.
For your vehicle, you have signed for 48 months, but because you are over indebted, now you must repay this car for the next coming 60 months or 72 months. It depends on your affordability. So your financial muscles determine what you can pay.
Okay.
So that's what debt counselors do. They restructure your debts, they reschedule your payments, you pay what you can afford to pay until you're done.
Okay. Now, debt counseling, it sounds good, hey? I want to believe it's a great process, but we need to understand the nitty-gritties, Zion.
True.
Like you've said, I would approach a debt review company. They would do the assessments, then they would negotiate on my part with the creditors, and then we come to a conclusion. Is this a legal process? Are courts involved in it? Or is it just between me and the debt review company?
The answer is yes. The debt counselor has the strength, the power to force a credit provider who's refusing a consumer who is over indebted and he cannot. So the debt counselor will approach the court and says, this credit provider is refusing my client to be placed under debt review. So the courts are also involved when you go under debt review. So the decision to be placed under debt review can be enforced even by the court.
Yeah.
So once you are under debt review, you are protected. You are protected even against repossession.
Yeah.
Remember I said the National Credit Act allows, in fact, credit providers have a right to issue out Section 129 notice to you when you are not coping with, when you are not paying what you have agreed to pay. So even when you are placed under debt review, you are also protected. Your property is protected against repossession. You're also protected against being bullied by the credit providers.
Sure. Okay. Now that I'm under debt review,
Yes, ma'am.
can I enter into new credit contracts?
Unfortunately, not. And that's one of the challenges that consumers have out there. They put themselves under debt review while they can afford to pay.
Okay.
Once you are under debt review, you will no longer buy or apply for a loan or buy on credit until a debt counselor has issued out a clearance certificate. It's only when after the debt counselor has issued a clearance certificate that you will be allowed to buy on credit. And unfortunately, many people who are married, I can see you are a married lady. Many people who are married, they go under debt review behind their husband or wife's back. So you have to involve your spouse, especially if you are married
in community
of property. Shamine.
Yeah.
So once you sign to be placed under debt review, even your spouse is automatically under debt review.
If you are married in community
of property. Okay. Yes.
Wow.
Because not only yourself will be denied credit, even your spouse. Today you have signed to be placed under debt review. Your spouse, in your absence, gets a promotion and he wants a new car. He or she can afford to pay the installment. But because you are married in community of property, the fact that you are drowning in debts, it means even your spouse is drowning in debts. So your spouse won't be allowed to buy on credit. Even just a simple cell phone contract, for example, 100 rand cell phone contract, they'll decline your application because you are under debt review. And what is the reason? Debt review basically is like undergoing rehabilitation.
Yeah.
For you to succeed in living a normal life again, you must go through the process of rehabilitation until you are done.
Okay.
So as long as a debt counselor has not yet issued a clearance certificate, you will no longer buy on credit.
Oh, that's hectic.
That's hectic.
Yeah, it is important for you viewers and those who are considering going under debt review to really think about this. That there are good things out of the debt review process, but then there are also things that will prohibit you from accessing credit. Let's say I sign up, and then after 2 weeks I'm like, this is not for me. I shouldn't have gone under debt review and saying I want out. Can I?
Once the courts have finalized this matter, the credit bureau has listed you under debt review, you have to stomach this until to the end. Ketile. Oh. Sis Wendy, it's like when you are here in Joburg, you decide to take a one-way train to Cape Town.
Yeah.
From once it leaves the station, the next stop is Cape Town. You have to stay inside the train until it reaches its destination.
Wow.
If you decide to jump out, chances are high you may even lose your life because you are taking a risk with your own life. Yeah. Now, even debt review, once you have finalized, you have applied. Number one, you must complete application form. Then you must pay an application fee, 50 rand. Then they charge you 300 rand administration fee. They look at your marital status. If you are single, you'll be charged up to 8,000 rand.
8,000?
Up to 8,000 rand. If you are married, you'll be charged up to 9,000 rand. Then you are under debt review. Your assets are protected against repossession. Your assets are protected against repossession. So now you are paying a negotiated amount, a reduced amount. You pay that amount until you finish. When you are done, a debt counselor must issue out the clearance certificate. Yeah. If you decide not to continue, the credit providers won't reject your money. They will accept it if you say, no, I'm no longer paying I'm no longer under debt. Gonna use a PDA. Remember, after you have been followed all those processes, a debt counselor will place you under a PDA, payment distribution agent. Money will be deducted from your account. It will be distributed to all creditors. So some people, what they do is they just change their bank account. You move from bank A to bank B. The credit providers and the debt counselor only have accounts for bank A. When they want to debit, you have closed your account. And you go to the credit provider and say, from today, I'm going to pay my account directly with you. They won't reject it. They will accept. You'll pay, but this time, you must pay the full amount. It's no longer a negotiated amount. Because remember, you were placed under a system or process that allows you to pay less. Now you are saying, I've got financial muscles. So prove that you are a muscular person. Pay your accounts fully. The minute you abandon the process, then the credit providers have rights to repossess your car, repossess your house, repossess your furniture, because you have decided not to continue with the process or the review.
Thanks for shedding light on that. For those of you who are watching, please understand that once you get onto that platform and you get on the train, it's a one-way train from Johannesburg to Cape Town. You can't get off the debt review process until you have paid everything. This is a legal process. The courts are involved, your creditors are involved. So my advice is that before you enter into debt review, understand it, ask questions, do your research before you put your pen and your signature to that piece of paper. Well, thank you so much for that enlightening talk. I must be honest, Tiki, I leave, this session very empowered, and I want to believe also those who are watching will be empowered. So thank you so much, Dr. Alf Matsimbi from the National Credit Regulator. And as we usually do when we close off our show, we always ask our guests to share one seed of wisdom that the viewers can take and keep with them. So what is it that you'd like to just leave them with around credit that we've spoken about?
Thanks, Oswendi. What is of critical importance to consumers is to be able to distinguish between good and bad debt, to be able to distinguish between needs and wants. Credit has to be used to purchase assets, which can be classified as needs. The minute you buy or you service your wants using credit, you are digging a hole for yourself. Not everything that we buy on credit is an asset. An asset gains while wants or liabilities depreciate. So it's of importance. And my last parting word is that if you didn't budget for it, don't buy it. Maybe the consumer or the viewer out there is saying, what is a budget? A budget is an expenditure as well as a savings plan. You have to work out the budget prior to making any form of purchase. Whether you are buying cash or you're buying on credit, make sure that you have worked out your budget first. If you didn't budget for it, no matter how loud it calls your name, many women out there will say, this dress was calling my name. No matter how loud it calls your name, you just say, no, I'm not your relative. I did not budget for you. Many of us as gentlemen, as we are passing in front of the chemist, you see those bottles are crying for you. You think they are crying for you, and you take out your credit card and you bail them out. If you didn't budget for those bottles, no matter how much they cry for you, just say, shut up, remain there. But unfortunately, discipline is a problem. Many of us, we lack discipline. Just because I'm thirsty, I get confused that I'm thirsty for water. Instead of getting water, I get other things to quench my thirst.
Sure.
And if you didn't budget for it, you are putting yourself in trouble.
There you have
digging a
it.
hole for yourself.
Thank you for those words of wisdom. There you have it. If you didn't budget for it, don't buy it. No matter how much it calls your name. As you're walking through those aisles, the dress is saying, Wendy, Wendy, take me. Leave the dress alone.
Yes.
Well, we've come to the end of our session, and I'd like to say thank you, Dr. Alf, for all what you've shared with us, and to you at home. I wish you well as you enter into new credit agreements. You have been empowered. Use the wisdom that has been shared to make the right financial decisions. Until next time, thank you.